In this video, I will show you how you can make a lot of money investing. When people hear about investing, they usually think of cryptocurrencies like Bitcoin, Dogecoin, and Ethereum, which have made people a lot of money. But if you're just new, this is absolutely not the way to go. This video is not financial advice, and I'm just showing you my past experiences by investing. I'm no way, shape, or form able to advise you how to invest your money. So let's get into it. Also, stay to the end where I give you a little bonus hack that I use to make a lot of money. A fund is a stock with many different stocks. So when you're buying a fund, you're buying a little piece of a lot of different stocks. In that way, a fund has a lot more stability and it's not as volatile as, for example, stocks or cryptocurrencies. So it's a more slow, steady, and in many ways safer way to invest. So if one of those stocks performs very bad and you have invested in a fund that has that stock, it would not influence the money you have invested in the fund as much as if you have invested in the stock. If you had invested in the stock, you would lose all your money if it went bankrupt. But if it's in a fund, you would only lose a bit, maybe some percentages, which is chosen by the number of stocks you have in that fund. A stock, that's a share of a company, for example, Apple. If you buy a stock or an Apple stock, you buy a tiny part of Apple. So you're basically, in one way, an Apple owner. You own a little bit of Apple. So, for example, the people owning Apple, they may have 40% of the shares. So you can buy, for example, 0.001% of Apple. And then if Apple performs very well, it will evolve its value. And therefore, your share is worth more than it was worth when you invested in it. So you sell your part to somebody else when it's worth more, so you get more money for it. The simple reason you should invest is because when money stays in the bank, there's something called inflation rates, which means that the money over time is losing value. You can see that in past history with financial crises where things cost a lot of money or little money. Like for 100 years ago, things were a lot cheaper than they are today. Maybe even in your lifetime, you may have seen some differences in pricing. That's basically, long story short, inflation. And instead of having your money in a bank account where it simply doesn't earn any money, you can invest it in the stock market or in the fund market, what I'm talking about. You will get a lot more in return than if it just is in your account. If you're in the account, it just doesn't grow. And if inflation rate is 3%, for example, you will lose basically 3% of your money each year. Even though you have 100,000 in your bank, that 100,000 from 1 year from now is worth just 97,000. And from a year after that is 94,000. And it just keeps going. And the important thing is that the stock market has a trend to always move upwards. It has been moving upwards since it first started. Even though it goes up and down in a short-term scale, like week to week and month to month, usually within years, it always goes up. That's why one can say confidently that you should invest. So let's get to the juice. The most profitable and best way to invest, even said by famous people like Warren Buffett, which is the king of investing basically. Warren Buffett's advice is to invest in S&P 500. The S&P 500 is a collection of the 500 biggest corporations in America, which have been outperforming the average trader in years. And the average return on the S&P 500 is over 10% each year. You may have a year where it goes down, which is not usual, but in average, it goes up. So that's a steady, good income. And if it fails, basically the whole American economy fails, which I would say is not that probable. But that's the only risk management you should take when investing in the S&P 500. That is, do you believe in America? I'm not American, but I still believe in America because it has so many good companies and entrepreneurs. And of course, because of the facts and the data that shows that it have outperformed every other index every year for decades. So here comes the bonus. Okay, so basically this is the bonus. S&P 500 equals 10% profit each year. And then I saw that you could borrow money for 4% each year. So what I did, I don't advise you to use margin and borrow money. That's very dangerous. But if you're comfortable and know what you're doing and have some experience, you could take out a loan and invest in the S&P 500. And you will get 6% on the money that you borrowed. So I borrowed multiple of the money I had in the S&P 500, and that made, instead of making 10% every year, I now earned 15% every year because of the borrow money. And that's after paying for the price for the loan. But that's everything for this video. I also advise you to get a little book of common investing, which showed me with the different graphs and stuff that the S&P 500 is the best investing you can take. You can get that book by signing up for Audible in the description down below. Thanks for watching.